Hello to everyone. Today I am here with Anti-Money Laundering Part 6A. If you are interested to have more videos on banking and finance related topics, please do subscribe my channel. Anti-Money Laundering, Customer Due Diligence. Now in this session, we are going to cover Introduction to Customer Due Diligence, Elements of Customer Due Diligence, Possible customer risk factor, high risk customer, enhanced customer due diligence. Customer due diligence means verification who customers are, the financial institution, what source of the transactions they should expect from a customer according to the nature of business that person is dealing, and what might be suspicious. The better the institution know its customer, the more effectively it can prevent money laundering and terror financing. Customer due diligence measures are a key part of anti-money laundering and counter financing terrorism requirement. Under the Anti-Money Laundering Act, every reporting entity should, in accordance with regulations issued by relevant regulatory authority of that reporting entity, conduct customer due diligence and maintain record of transactions, account files, and document obtained through such diligence. Element of customer due diligence program. The FATF advised that the institution have customer due diligence programs that include these four measures. Identify the customer, verify the identity with reliable independent document or information, identify beneficial owner of the company and take reasonable measures to verify their identity. Find out purpose and intent nature of the business relation. Customer due diligence on relationship and transaction that the customer makes. Check that these transactions are consistent with customer's business and the source of the fund. So if they are not consistent, it becomes suspicious. Customer due diligence program 7 elements. Customer identification, and on the other side, identifying customer and business entity, including source of fund if appropriate. There must also be a process in place to update clients' information from time to time. First of all, customer profile. Each customer should have a transaction and activity profile. This enables institution to review anticipated versus actual activity and therefore identifying suspicious activity. Customer acceptance of the customer and their use of particular products and services. Risk rating, assessing and rating risk that the customer may present. The financial institution must consider a lot of different factors that should use a single factor to determine risk unless it constitutes illegal activity. Monitoring accounts and transactions based on the risk. Investigate any unusual customer or account activity depending on the type of the business. Document finding as evidence and as a record. Now you can add more information according to your policy, your country policy, regulations, rules and regulations and policy. Simple due diligence example, managing payroll of a small construction company. Example of Customer due diligence, high risk, secretarial services for a tech startup company. In case of high risk customer, may to enhance the customer due diligence. Now, first of all, you will have to identify either it's a low risk customer or the high risk. According to that, you will go for the identification and you will decide either you require to enhance your investigation or not. Possible customer risk factors. Factors may then indicate that a customer is high risk. Unusual way of conducting the relationship, for example, an explained distance between the institution and the customer. Not residing in the same country as the financial institution. Even a customer is not from the same city. You should also have to find the reason. Use the legal person or asset holding vehicle. Having nominee shareholders or the shares in the bearer form. Dealing in cash incentive business. The company's ownership structure appears more complicated than necessary. Thereafter, geographical risk factor. Countries and the territories can represent a high risk if the credible sources say that have the high level of the drug trafficking, corruption, or the financial crime. If a customer is from such territory, do not have adequate anti-money laundering system, provide funds or support from terrorist activity. So, geography, there is a significant importance of the geographical location of the customer or from where the transaction is going to route. Transaction risk factor, the following type of the transaction are risk indicators for private banking, anonymous transaction, non-face-to-face business relation, receiving payment from unknown third party. Enhanced due diligence for the higher risk customer. Additional information may be required for the high risk customer. This could include the source of fund. Source of fund is very important. Information of the key account controlling person. Type of businesses, business, financial statement, banking reference, date and place of the bank. So, these information lead in order to enhance the due diligence. Proximate to the bank, would you expect international transactions in their area of the business? Anticipate volume, currency, and the total sale. Explanation for changes of the activity. See you again very soon with upcoming video on anti-money laundering. Thank you very much.